Dame I gospodo, poštovani predstavnici medija.
Ladies and gentlemen, esteemed members of the press, dear colleagues, welcome to the presentation of the November inflation report. We will give you an overview of monetary and macroeconomic trends since the previous report and set out our expectations for the period ahead. At the very beginning, I would like to stress that since the August report, macroeconomic indicators have remained favorable, while macroeconomic outlook marked an additional improvement. Economic growth has accelerated, inflation is at a low and stable level, relative exchange rate stability has been preserved, and inflationary pressures have remained low in the face of strong economic growth. This is primarily a result of joint efforts of all economic policy makers aimed at laying the groundwork for sound and sustainable economic progress. Of particular importance is the fact that our country is recording good results, even though the international environment continues to be plagued by a high degree of uncertainty. Volatility in commodity markets persists due to volatile prices of oil and other primary commodities, as well as in the financial market amid different dynamics of monetary policy normalization of the Fed and the European Central Bank. Geopolitical tensions and rising protectionism in the relations between leading economic powers are an additional source of instability. Such global market developments also reflect on the slower than expected growth of the euro area, our most significant economic partner. However, since policies in Serbia are fully coordinated, internal and external imbalances narrowed down and macroeconomic prospects improved, strengthening the resilience of our economy to external uncertainties. The importance of increased resilience is practically visible. Namely, this year Serbia recorded the fastest growth in the last 10 years, despite adverse external conditions. In the past 3 quarters, GDP growth reached 4.5% year-on-year. Acknowledging this fact and a faster than expected rise in investment, we revised the GDP growth projection for this year upward from 4% to 4.2%. Serbia's growth projections were upgraded by all relevant international financial institutions: the International Monetary Fund, the European Commission, some rating agencies, and many economic analysts who monitor developments in our country. Based on the results of the achieved macroeconomic stability and implemented structural reforms, we expect similar growth dynamics in the medium term as well. The benefits of this economic progress are also felt more by our citizens. Wages and pensions are rising on sustainable grounds, and unemployment is at the lowest level in the last quarter of a century. Ladies and gentlemen, dear colleagues, by maintaining price and financial stability and relative stability of the exchange rate, the National Bank of Serbia has greatly contributed to the creation of a predictable environment for doing business and for financing production, investment and consumption. Year-on-year inflation is within the target tolerance band. It measured 2.2% in October. That inflationary pressures are still low is indicated by the fact that more than half of the contribution to year-on-year inflation stems from the hike in the prices of petroleum products and fruit and vegetables. This is also corroborated by the low and stable core inflation, which moved around 1% year-on-year in the past months. According to our latest medium-term projection, which is almost unchanged from August, inflation will be moving within the target tolerance band of 3 plus minus 1.5% until the end of the projection horizon. That is, over the next 2 years. Inflation movements in the medium term will be determined by the rise in aggregate demand. Also, disinflationary pressures on account of the past appreciation of the dinar will gradually wane in the coming period. In the short term, low costs of food production will work in the opposite direction. Financial and corporate sectors also expect inflation to be within the target band both for 1 and 2 years ahead. Their anchored expectations are the best evidence of market participants' confidence in the measures taken by the National Bank of Serbia and an indicator of the rising monetary policy credibility. Much more favorable financing conditions for the private sector and government are indicated by the interest rates on new corporate and household loans, which in Q3 moved close to the lowest levels recorded in the past months. Better financing conditions are a result of monetary policy easing, lower country risk premium, increased competition and persistently low interest rates in the international money market. In nearly all of these segments, we can recognize the importance of domestic factors, primarily of macroeconomic stability, which reflects well-coordinated monetary and fiscal policies. In such conditions, economic growth, accompanied with labor market recovery, contributes to the further increase in lending activity. In September, the year-on-year growth in total domestic loans accelerated to 7.7%, excluding the effect of exchange rate changes. This credit growth was recorded against the background of continued efforts to resolve NPLs, which led to their significant write-off and sale to non-banking sector entities, supporting the investment upswing and the acceleration of economic growth. In slightly more than 3 years since the adoption of the NPL resolution strategy, the amount of non-performing loans was slashed by over 67%. At the same time, their share in total loans was cut by close to 16 percentage points to 6.4% in September, which is their lowest level since 2008, when the monitoring of this indicator of bank asset quality began. Owing to the considerable drop in the NPL ratio, high capital adequacy of banks, and better access to small and medium-sized entities financing, Serbia made a significant progress in the international competitiveness list of the World Economic Forum for 2018, as judged by the financial system indicators. Ladies and gentlemen, dear colleagues, with low and stable inflation, relative exchange rate stability, favorable financing conditions and maintained financial stability, we have contributed to keeping the economic environment stable and conducive to doing business. By implementing consistent monetary policy and coordinating it successfully with fiscal policy, together with the government, we have achieved the results which additionally inspire market participants' confidence in economic policy makers and make growth sustainable in the years to come. Positive outlook for Serbia was recognized by a great number of investors that are increasingly deciding to make long-term investments in our country. Owing to this, net FDI inflow, as in the previous 3 years, will be more than sufficient to fully cover the current account deficit. In the first 9 months of the year, this coverage was over 122%. In the medium term, the activity of domestic and foreign investors will result in capacity building, primarily in tradable sectors, and will thus underpin growth acceleration in the longer term. Thanks to excellent results of fiscal consolidation in the past several years, investment growth is now increasingly supported by the government too. The achieved fiscal balance and the reduction in the share of the central government public debt to a sustainable level, 55.9% of GDP in September, contribute to favorable prospects for a further credit rating upgrade and to lower country risk premium, making external finance more accessible and cheaper. The pickup in economic growth and improvement in the standards of living are a proof that we have worked to the benefit of all, strengthening the economy's resilience to external shocks and taking great care that the solutions implemented are sustainable in the long run. The National Bank of Serbia will continue to closely monitor and analyze the international markets and to assess their impact on economic developments in Serbia. Looking ahead, price and financial stability, as well as continued support to the economic policy of the government, remain our priorities. We believe that by contributing to favorable business conditions and hence competitiveness of the overall economy, we have proved that we are a reliable partner to everyone doing business in Serbia and will continue to be so in the future. Thank you for your attention. I will now give the floor to my colleague, Savo Jakovljević, General Manager of the Economic Research and Statistics Department.
I would like to thank Vice Governor Jovic, and now I will give you a brief overview of current macroeconomic developments, our new projections of inflation and economic activity, and monetary policy decisions. At the very beginning, I would like to say that the NBS has again revised up its GDP growth forecast for this year to 4.2% from 4%. The main reason behind this upward revision is the materialization of the upside risks that were identified in the August inflation report. Faster growth in construction and agriculture from the start of the year on the production side and in investment on the expenditure side. We kept the growth forecast for 2019 unchanged at 3.5%, keeping in mind the high base this year. It is expected that GDP will sustain its growth pace of around 4% in the medium term as well. Against the background of the highest economic growth in the last 10 years, inflation remained low and stable, consistent with our expectations. In October, it measured 2.2%, and same as in the previous months, more than half of it originated from two groups of products, petroleum products and fruits and vegetables. Other groups of consumer prices mostly had stable movements. Under our new projection, almost unchanged from the one presented in August, inflation is expected to remain low and stable, moving within the target tolerance band in the next 2 years as well, that is until the end of the projection horizon. Since our last presentation in August, favourable fiscal trends have continued. The budget has recorded a surplus and public debt is within sustainable boundaries. Full coordination between fiscal and monetary policies, hand in hand with successful fiscal consolidation, provides an impetus to economic growth. The rising government capital expenditure boosts investment, and higher pensions and public sector wages contribute to sustainable consumption growth, while not causing any major inflationary pressures. Manufacturing exports continued to grow at a high rate, while the rise in imports was driven by increased needs of corporates for equipment and intermediate goods, reflecting the current investment cycle. Foreign direct investment remains high, project diversified and channeled mainly to tradable sectors. In the first 9 months of 2018, the net foreign direct investment inflow exceeded 1.8 billion euros, providing more than full coverage of the current account deficit. Such trends, we expect to see such coverage also in the period ahead. Developments in the international environment grew more complex since we last met in August. Global economic outlook is slightly weaker, and the forecast for this and next year was downgraded by almost all relevant institutions, so now it stands at last year's level of 3.7%. Economic growth of the euro area, our main economic partner, was also revised slightly down, except that its economic activity is expected to remain above potential. Global inflation is somewhat higher than in the prior period. The ECB did not change its projection of euro area inflation. It still expects inflation to trend slightly below the target at 1.7% in the next 2 years. The rise in oil prices in the global market was the main reason for somewhat high inflation in the international environment. For more than a year now, the global oil prices have been on an upward path at over $80 per barrel. They were on average 46% higher in Q3 than in the same period last year. Although it decreased thereafter, uncertainty regarding its future movement has intensified, mainly due to geopolitical tensions and supply-side factors. According to oil futures from the beginning of November, which we used in the projection, global oil prices are expected to stabilize at the current levels by the end of this year and to mildly decrease in the next 2 years. Speaking of other primary commodities in the global market, prices of primary agricultural commodities which are of relevance for Serbia declined since our last projection, primarily due to better supply of the majority of grains except wheat and protectionist measures. Taking into account futures movements compared to the previous projection, we lowered the assumption for their growth for this year from 11.3% to 6.0% and revised up the assumption for the next year from 6 to 9%. Greater uncertainty surrounding the global growth and inflation outlook also fuse uncertainty in the international financial market regarding the pace of normalization of monetary policies of leading central banks. The spread of protectionism and tightening of trade tensions could dent investor sentiment and thus affect global capital flows to emerging economies. However, the ECB will continue to reinvest principal from maturing bonds for an extended period of time after winding up its asset purchase program by the end of the year, while keeping its key interest rate unchanged at least through the summer of 2019. Despite mounting uncertainty in the international environment, domestic macroeconomic conditions in which monetary policy is implemented have remained favorable, as evidenced by key macroeconomic indicators. Internal and external imbalances narrowed down significantly, which increased Serbia's resilience in the international international environment. This is also suggested by the country risk premium, which is among the lowest in the region and considerably lower than the risk premia of European emerging economies. Investors' perception of Serbia is favorable, as also shown by the net capital inflow of 2.2 billion euros in the first 9 months of the year, including mostly foreign direct investment, 1.8 billion euros net. Same as in the previous 3 years, FDI more than fully covered the current account deficit, 122.3%, which coupled with good export results contributes to relative stability of the dinar exchange rate. As appreciation pressures on the dinar prevailed in the major part of 2018, in the year-to-date, the NBS intervened in the FX market by purchasing 1.6 billion euros net. Owing to past monetary policy easing, interest rates and dinar loans moved around the minimum recorded in the past months, which contributed to lending growth. Other favorable factors, particularly economic growth and labour market recovery, higher interbank competition, a lower country risk premium and low euro area rates, propped up lending growth, which in September came at 7.7% year-on-year, excluding the exchange rate effect. Excluding the effect of NPL write-off and assignment, lending growth was even more pronounced, 11.9%. The share of NPLs in total loans fell to 6.4% in September, which is the lowest level of this indicator of bank portfolio quality since its monitoring began in 2008. Against the background of softening external demand growth, domestic factors pushed up strongly economic growth to 4.9% year-on-year in the first half of the year, which was above our expectations. The brisk pace of growth extended into Q3 as well, 3.7%. The largest contribution continued to come from service sectors and construction, as well as excellent agricultural performance. On the expenditure side, an impetus was provided by investment and household consumption. GDP growth continued into the 14th consecutive quarter and came at 0.3% seasonally adjusted in Q3. In view of the faster growth in construction and agriculture since the start of the year on the production side and rising investment on the expenditure side, we raised the GDP growth projection for 2018 to 4.2%. The growth forecast for 2019 was kept unchanged, 3.5%, because of the higher base this year. Growth in exports is expected to exceed that in imports on account of past investment, elevated external demand, and high export inventories of agricultural products following an excellent season this year. GDP growth is estimated to continue to be led by domestic demand, that is, investment and household consumption. The risks to the GDP projection are assessed to be symmetric, while the risks emanating from the international environment are mildly asymmetric to the downside due to the potentially faster than expected slowdown in the euro area, while the risks associated with the domestic environment are mildly tilted to the upside due to the potentially faster than expected growth in construction. In accordance with our expectations from August, year-on-year inflation continued to move within the target tolerance band and reached 2.2% in October. More than half of inflation concerned only two groups of products, petroleum products and fruits and vegetables. Second-round effects have not taken place. That is, rising prices of petroleum products and unprocessed food did not spill over to other prices, which indicates confidence in NBS monetary policy. That inflationary pressures are low is also confirmed by core inflation, which is stable and at around 1% year-on-year, as well as the inflation expectations of financial and corporate sectors that are anchored around a 3% target. Under our central projection, which is almost unchanged relative to the August projection, year-on-year inflation is expected to continue to move within the target tolerance band in the next 2 years. That is below the target midpoint until the end of 2019, getting temporarily closer to it in the first months of 2019 owing to the low base effect. Medium-term inflation movements will be under the dominant sway of aggregate demand. These inflationary pressures, generated by past appreciation of the dinar, are expected to gradually wane. In the short run, this inflationary effect will come from low food production costs and in 2019 also from this year's high base for fruit and vegetables and petroleum products. Working in the opposite direction will be the assumed administered price growth of 4%. In the period from August, the NBS Executive Board kept the key policy rate unchanged at 3%, its lowest level in the inflation targeting regime. In making the decision to keep the rate on hold, the board was guided by expected movements in inflation and its underlying factors and the effects of past monetary policy easing. Caution was mandated by uncertainty in the international financial and commodity markets, notably of crude oil and primary agricultural commodities. Given that the key risks to monetary policy emanate from the international environment, the NBS will continue to carefully monitor and analyze trends in the international financial and commodity markets and to assess their impact on economic developments in Serbia. As so far, monetary policy will be predictable and consistent in delivering low and stable inflation in the medium run, which will, along with the preservation of financial stability, contribute to sustainable economic growth and strengthen resilience to external uncertainties. Finally, I would like to highlight that the November inflation report contains 4 text boxes on topical issues. The first text box analyzes the structure and terms of lending to small and medium-sized enterprises through the lenses of the new interest rate statistics. The second box elaborates on the significant improvement in Serbia's foreign trade position in the highly competitive global market in the period from 2012 to 2017. The third text box focuses on the impact of the revision of GDP data in the period from 2015 to 2017 on the most important macroeconomic indicators, whereas the fourth text box analyzes rising trade tensions and their impact on economic developments in the world and at home. Thank you for your attention. We remain at your disposal for any questions.
Današnju prezentaciju izveštaja o inflaciji, da vas pozovemo da
I will use this opportunity to invite you to have a closer look at the November inflation report. The National Bank of Serbia remains open to answering any queries. If I understood you well, you said that unemployment was reduced. Could you please tell us what is the percentage of this decline and on what is your assertion based? Thank you for your question. The unemployment rate in the second quarter of 2018 equaled 11.9%, and it has been halved relative to the period of several years ago. What contributed to unemployment decline is the increase in the employment rate and participation rate. Employment gains are recorded mainly in manufacturing industry. Relative to 4 years ago, we have 80,000 new employees. Then in construction and services of the private sector, we have also marked an increase in employment. Have you noted this only with foreign investors? No, you cannot have statistics that is precise to that extent, but definitely we're not talking only about foreign companies. Are there any further questions? If not, I will conclude this conference. I invite you also to take a closer look at the inflation report, and should you have any questions, feel free